Hincks is with me, co-host of Fast Market, live at the CBOE. We're getting in a lot of data. I saw a lot of the economic data this morning already. It's feeling okay, even though futures look mixed. It's feeling okay today. Some of your thoughts?
Good morning, Nicole. Yeah, I mean, the Dow Industrial Average is going to be skewed 700 to 800 points by the UNH move. So you almost have to take that out as its own little sector, add that back in to see what the other markets are doing. So, yeah, you've got the E-minis up about 0.5%. You got the NASDAQ up about 0.7. Those were both higher earlier, so they've eased back to those levels. But, yeah, UnitedHealth and American Express, we're seeing pre-market a little hesitant, although American Express put up good numbers and basically said that consumer spending was up 6%. Here's their quote, Nicole. People are eating out and enjoying life. That doesn't sound like a weakening U.S. consumer from American Express's perspective. So, but that stock is basically unchanged, down slightly this morning. But we got economic data, really strong jobless claims data, 215,000 first-time filers for unemployment insurance. Then we got housing starts and permits, a miss on the starts, which is when they actually start building the foundation. It's registered as a housing start. 1.324 million. That's a miss. They're expecting 1.42, but a beat on the permits. So the future for housing looking a little better, 1.482 in terms of permits. Then we got a Philly Fed number that's always a little volatile and hard to measure. It went from up 12.5 to down 26.4. Take that for what it's worth. It's a regional number on Philly Fed manufacturing index. So take all that. You've got a ECB rate cut from 2.65 to 2.4. You've got some earnings coming out, like I said, in American Express, UNH. You've got a little recovery in futures across the board, except for UNH. So we're going to be working against that narrative all day. It's the market looks okay, but the numbers don't look as good because of one stock is down a significant amount, Nicole.
Yeah, and look, we got in retail sales earlier this week. That was pretty good. I can't remember New York manufacturing. I always like to look at that one, the Empire manufacturing. Now that you bring up the Philly Fed one looking so terrible. In the meantime, the president's been very loud with his comments pertaining to Jay Powell this morning, and the ECB cut rates.
Yeah. You and I were on the air yesterday, right during and right after Jerome Powell spoke. And I don't know if you saw me on the air, I was a little bit in shock from some of his comments. And so I think Jerome Powell did, the U.S. economy a disservice by wading into fiscal policy, which he spent most of the last 4 or 5 years staying out of. He didn't stay out of it yesterday, and the markets reacted very negatively to it. Now, we're recovering today. I knew when I left the exchange yesterday, went home, that we'd hear from President Trump about Jerome Powell's comments. Sure enough, he did talk about them. I'll let everyone do their own research on that. But all things considered, it was an interesting day that, normally when Jerome Powell speaks, he gives information to the markets that they take in positively. Not yesterday, as he weighed in to fiscal policy in a move that he hasn't normally done in the past, despite 9% inflation, despite $4.8 trillion in spending from the government. He stayed out of fiscal policy. Not yesterday, Nicole.
What part, I'm curious, what part of yesterday's comments do you think he really attacked fiscal policy? What part of it set you off?
Well, he said the tariffs are going to weaken the economy and cause inflation, right? When 4 years ago that didn't really happen, and that's projecting on the economy, not taking the economic data, like you mentioned, the hard economic data that's been coming in, showing a stronger U.S. economy and showing weaker inflation. He said the exact opposite yesterday, and he made predictions about the U.S. economy, and that's what got me surprised. I think that's what got the market surprised. Suddenly, after 4 years of staying out of fiscal policy and commenting on 4.8 trillion in spending and a 9% inflation rate, suddenly now he's saying in the future, these policies are going to weaken the economy and cause inflation. I thought that was not in his lane for Jerome Powell.
Yeah, more persistent rather than transient. I remember him saying something like more persistent rather than temporary. He also talked about price stability and the concern about unemployment rising, and that, you know, we would have that situation. So yeah, he was downbeat, to say the least. All right, how about Japan? We have this, the Japan coming in to speak with the Trump administration. We have NVIDIA still in the headlines.
Here's where why I think the markets are rallying this morning. I think you had good news out of Japan yesterday. This morning, they mentioned that Mexico, they had a good conversation with Mexico. And now today, Italy is coming to the White House for negotiations. So you're starting to see key parts of Europe, key parts of North America, Mexico, and Japan all coming, talking about trade. So, but again, like I told you yesterday, we need some news headlines about deals being reached and made and signed. They keep talking about positive negotiations and good talks, but I think this market really wants some hard headlines about improved trade deals between us and other countries. But right now we're talking about Japan, Mexico, and Italy today. Nicole?
I think they're waiting for the whammy. I don't think they're going to let it trickle out. It doesn't make news when it trickles out. Just like he gave the whammy on the big, here are the tariffs, hit you over the head with them. They were unbelievable. Everybody couldn't stop. Then it's going to be, and we have this one, and we have that one, and we have this one, because one's not going to be enough. So they are making deals and wait for the whammy because it's coming. I mean, that's what they're telling us. So I'll believe them and I'll wait for it. Kevin Hincks, good to see you.